we've been planning for a while to do an episode like this, and what we're going to do is review the trading challenge that we took part in. We will be revealing the results at the end of this little segment. So if you do want to go back and watch it all, then just make sure that we'll forewarn you about the telling you the results. But just so you're aware, we will be revealing that. But yeah, we're just going to kind of talk through our experience of how we found it, and not from a £300 or the £200 challenge point of view, just like what we kind of learn and what advice we give to other people looking to get into trading, because it is something I think a lot of business people talk about, and we definitely learn a lot. Would you agree?
Yeah. Oh, definitely. Yeah. I mean, we started it as the Idiot Trading Challenge, and we are nowhere near experts on this. So everything we are saying is just from our side of it. Yes, if anyone has been watching along, we definitely did. If you haven't and you want to see some form of idiots do a little bit of trading, then yeah, you'll have to go find us on that. But I'm sure we'll talk about where you can get to us at the end of this.
So yeah, we will obviously share how to find us. Just the basic premise of the Idiot Trading Challenge for anyone who is new to the podcast, which I sense we might have a couple of new people. But like I say, we'll come on to that at the end. The idea behind it was basically we wanted to do a business challenge of some form, something new that we hadn't really done before, and something that we could learn and we're both interested in. And we've both kind of looked at the stock market before, dabbled in it in different ways, but not really committed to learning anything about it. So we set up a challenge where we put £200 each into our own accounts on Trading 212, which I think has been a great platform, and just set ourselves the target of making as much money as we could over a 4 or 5 week period. And it was just a bit of fun. We put a few forfeits in there each week for the loser and little bits like that, just to keep it interesting and competitive. Nothing that would cost each other money, but maybe would stop us getting as bigger profits as we could have. Or we didn't really talk about what we were up to, so we're trying to give each other insights and gain knowledge from one another. And yeah, so basically we're going to answer 3 questions today. Each of us will give you an answer. So one thing we learned by doing the challenge, one thing we loved about doing the challenge, and one tip we would have for anyone else who's looking to not necessarily do a £200 challenge, but get into trading stocks and shares in the future. We didn't do anything like crypto or currencies, anything like that. So it was just company stocks that we could invest in. So if you've got any questions about our experiences, if you think about doing it yourself, then do feel free to reach out to us. What we do have to say, which if you have seen any of the videos, you'll see, is that we are not financial advisors. This is not financial advice. You need to, if you are thinking about investing your money, you need to do your own research, speak to accredited people. We're not going to be giving any tips on which stocks to invest in this episode. It is just our review of what happened. So I've been chatting for a while now, so I'll throw over to you for the first one, Tom, here. So one thing you learn from doing the Idiot Trading Challenge?
A lot. No, the one big thing I learned, which I kind of had a slight idea about before, I think, anyway, but when you're looking at your individual stocks, looking at what's going up, what's going down, the market on a whole changes drastically. Like when you're seeing, I'd say 9 out of 10 times, if one stock's going down, majority of others in that same market are also going down. Especially because in the challenge I dealt a lot with the FTSE 100 companies. You'd see if they were going up, all of them were having a good day. If it was bad, all of them were having a bad day. There was only the very few rare occasions where they would differ slightly, and that was quite a big shock on it, because it almost felt that even if something drastic is kind of happening with a company, it was more what was going on across the entire country or world almost for what was affecting it. Obviously that could be like changed a bit slightly due to going through the pandemic and everything like that. That might just be how it was, but with that, like with my experience, I'm pretty sure Matt had the same, but with the experience of doing the challenge at the time that we did it, that was pretty much what I was finding.
when I saw stocks booking the trend, it was for a specific reason to that stock. So, for example, they've reported some figures and they weren't as good or were better than, and that would mean that they probably book the trend of the market. But your general day-to-day stock movements were in line with the stock market, and it was about picking the best one within that market.
Yeah.
To just try and clinch that edge over each other. And it is like we got given a free share because of the way we signed up, and I reckon if you track the value of that share over the course of the challenge, it mapped the FTSE or that the main markets.
Yeah.
So yeah, definitely it's a great thing to kick us off with about. One thing we learned was that it's not down to a stock; it's down to the market as a whole.
Down to the market, yeah, 100%.
So the thing I said about was key pinch points, and you actually did a video about this during the challenge. You picked a particular stock which people can see over on our YouTube channel, and bought it when the market was closed, and saw what happened when the market reopened. So throughout the day, you'll see some steady changes in stock prices. You'll see them again, like we say, if there's a particular bit of news that affects them, they will shoot up or shoot down. But the biggest times where you see the biggest changes is on Monday morning when the market's been closed all weekend. And as soon as it opens, you could see stocks rocket or crash massively in like the first half an hour of the market being opened, and then they'll just level out and stay at that level. So if you're trying to make the biggest high risk returns, that's the time when the biggest movements happen. But it's a very risky strategy, and something we showed in Tom's video what can happen in them periods.
Yeah, it was weird to see that. That was because this in the video was based on Tesla stocks, and I kind of saw it happening once or twice while I was looking at Tesla, so I thought I'd just use some money and just try it basically, and yeah, it worked once, so I tried it again and it worked again. It was bizarre. I don't think I can't remember if we mentioned this in one of the videos or not, but I can't remember if I looked again the following week from doing that to see if it happened again. But it was a bizarre scenario to see.
Yeah, it was like it's not like the biggest movements, like not some of them aren't even huge, but if you just compare them to their general graph, that's when you see the biggest changes. And there's probably people listening to this who do trade and whether you do work in finance or whatever, and they're probably going, yeah, you idiots, of course that was going to happen. But for people who aren't into it, you don't realise that happens. And you can get, I know when we started, we got quite caught out, I think, like when we started with the practice account, like because we started on a Monday and it was like, oh, we've missed all the changes, and actually we hadn't. That happens every week. That wasn't,
yes,
we thought that was a one-off and we'd missed like these incredible returns, but actually it happens every week, up and down. So I think as well, like going on to the next point, which is one thing that we loved about doing it, mine ties in quite nicely, is that learning through doing. And yes, we had money that we were able to put in and we were willing to risk, but you can get the free trading account on there, the demo account, which we use for the practice week, which is, I think it's like you don't actually get any of this money, but it's like the equivalent of having £50,000 in your account of dollars, and you can trade that on stocks and see how the market reacts. And like the amount I learned in that first week using that test account, demo account, was just unreal.
Yeah, it was fun. I was even flicking back and forth between it while doing the challenge. It was fun to do, and it was nice going from the amount we was like able to invest ourselves to using such a big chunk of money, because when we were dealing with things, like we would have some great investments sometimes, like we'd have like 10-15% increases, but when you was dealing with the amount of money it didn't look that much, when you start using that 50,000 and you're getting that sort of increase, you can really see how people can and do make money very quickly in it.
Yeah, definitely. And I think that's the thing is like as well, the way we invested, I think, was very different when you're using the practice account compared to your own money. You're a lot more risk averse when you're using your own money, so you're not going to take the same kind of level of risk as you would with the practice account, and actually you learn less by throwing yourself in at the deep end, I think. But we've said it across other things. It's not just trading. We've said it about video, speaking, all these different things. The only way to learn properly is to actually do the thing that it is that you want to learn. And that's one thing I loved about doing this was I learned so much about the stock market because we were in it. And I wouldn't have learned that had we not have done the challenge. What about yourself? What did you love about the Idiot Trading Challenge?
I loved just the kind of research side of it all. I spent a lot of time at the start of it actually researching this. As I say, I dealt a lot with the FTSE 100 companies. I spent a lot of time researching into them. Then each day, pretty much, I was straight on the stocks app in the morning, and through Apple they kind of give you 5 or 6 headlines that are happening overall. But then if you also have stock on your watch list, it gives you specific ones relating to them if there is any. So just reading through them and the amount of bits that you pick up that you don't realise. So then you could be just looking through Trading 212, or you just see something out of nowhere and you're like, oh, I actually read an article about them last week and they're coming out with, they're getting a new CEO, or they've got a new product that's launching, and it's just stuff that you wouldn't see in your day-to-day basis of watching the news unless you was specifically looking for that, which you could kind of say about a lot of things, but it was very interesting to see that there's that capability right there, and there always has been, really. I just never really utilised it.
And I started watching those YouTube channels that I wouldn't have otherwise watched. When we get the paper, I was flicking to the finance section of the paper and having a quick read of that. Just always wanting to consume more, because the thing as well, like you're saying about the research, was that it was ever changing. It's not like you learn it and that's it. There's stuff to learn about each individual stock every week. So much to learn.
Yeah. Oh yeah, too right. Which from that point, I kind of falls into our next and final question that we was kind of going with was, what is it? What is a
one tip
or what would we recommend?
One tip for others.
Yeah. For me, it was trust your gut. Just from reading all that sort of, just all that research, all that news, all kind of, because we was religiously every day going on Trading 212, it was just constant. We was always there, so I was always seeing how things were moving. When there was the odd times where I would see something drop, you'd read a quick news article and it's, oh no, we've just fired that big CEO after this sort of thing, and it's like, oh well, that happened with someone else the other week. It dropped, but then it bounced back up briefly for a couple of hours, and it was little things like knowing that sort of thing. So it was like, all right, I'll put a bit of money on this, wait for it to go up, kind of know when to call it quits, get out, and then make a bit of money there. Little things like that. And a lot of the times it was scary because you were seeing all this news, you were seeing the price of it just drop, and it was that trust in your gut of, no, I'm pretty sure this is gonna go, and actually following through with the one or two that I actually did with that and seeing it happen was quite it was quite good to see. That was definitely a nice little thing I took away from that anyway.
And with the demo account that I mentioned, I did that in the practice week. I had some funds left in the demo account. Some news came out, and I was like, I'll forget to look up on this later. I'll forget what time it was announced, all this stuff. So I just invested in it just to see what happened. And I learnt so much from watching that stock over the next couple of days that when something else happened, I tried it again, but something completely different happened. So I thought, well, that isn't a rule. But I had only realised that wasn't a rule by testing it. And then when I saw other things, I was like, news was coming out during the actual challenge. I was like, as good as that sounds on paper, this could go either way. And I know that from what I've read and I understand, and my gut's telling me it could be unstable. So then you don't invest and you watch it go down and you go, great move. And then other times we both made moves where it went the wrong way. We didn't make wasn't all golden. We're not saying we're now,
No.
the best stock analysts in the world, but we learnt stuff, and I think anyone would doing it.
Yeah, definitely. I think a good example of what I was talking about is, I can't remember the episode for the life of me, but if you search for our channel, the Tom and Matt Take On, and put Wirecard at the end of that, hopefully with the tags, the description there, the episode should come up. But I don't know how it happened. That was just one of the things where I trusted my gut and kind of rode this huge crash back up a little bit to basically recoup the money I'd lost. And that again, that was just a huge trusting my gut moment, picking a price of when I was going to sell and just holding tight, really.
Yeah, definitely. And like for me, the one tip I had was, we did this very much as a short-term challenge, so we were reporting our results every week. So there was that element of, we wanted to pick stuff that would do well in the short term, maybe took bigger risks than we would otherwise. We've now finished the challenge. We've carried on with our accounts, just personally, not for any other reason than we wanted to. So my tip is to play the long game. Don't do it how we did it. Don't try and make day money. Don't try. You need to be on that account 24/7 to make and understand the stock market inside out, chart patterns, candlesticks, all this stuff that's just way too much. If you're going to ever make money in the short term, play the long game, look at stocks, look at the information you can find out about them, and use criteria, set your own criteria, speak to financial advisors, whatever it is, but play for a year or longer down the line, because if you're trying to make money between Monday and Friday, it's just ridiculous.
Yeah, absolutely.
So I think that's some quite interesting stuff there. Do you want to recap your thing you learned, thing you loved, and top tip?
Yeah, so my thing I learned was how much the stock market changes all your different stocks. The thing I loved was just kind of the research, the getting into knowing what's going on everywhere, basically. And my tip was to not lose my mind. Where has my mind just gone with that?
Trust your gut. Trust your gut.
Trust your gut. There you go. See, that was overthinking there. I was overthinking, trying to get my three, didn't trust myself, and just completely lost it. But yeah, tip there, trust your gut.
And mine, where one thing I learned was key pinch points. So especially look at them. If you're going to get into it, just look at them Monday morning points before you begin. One thing I loved was the fact that I was learning through doing. I wouldn't have learned everything that I've learned had we not been doing the challenge. And my tip is play the long game. So I think that's really good. And if you're interested in the challenge, that you can search for the Idiot Trading Challenge on YouTube. It will show up. So we've created a playlist and all the titles of all the episodes have it in. We did do 2 challenges. It all comes under one. It all runs in, but we kind of did one challenge and then another challenge. Or you can search for Tom and Matt Take On YouTube, because we've kind of rebranded the channel now. I know we spoke about it before, but it's we're doing a lot more than just the Idiot Trading Challenge. But for those who can't be bothered to watch, I can't even remember how many episodes. It's a lot of episodes, but whoever doesn't want to watch all of them, go on. How many was it?
I think there's about 25, 26.
It's going to keep you busy as we go into another lockdown. It'll keep you busy. But basically, for those who don't want to watch all of that, but just want to know who is the better trader of the two of us, the results are as follows. In the first challenge, I won. In the second challenge, when we restarted, we reset to 0. Tom won.
Yes.
2 things to be aware of. Not that I'm not letting Tom have his win, but we were only ever doing one challenge. So if one challenge was the main challenge, it was the first one. Also, on the second challenge, we miscalculated the number of weeks. We should have only done 4 weeks, and I was winning at 4 weeks.
Yes.
You picked me to the person on the last week. So, if you were going to ask who's the better trader, it's probably me. But based on the
Yeah.
the stats, it's 1-1. So we are going to be
It's
doing more
equal.
challenges and other stuff to try and sort this battle out down the line.
Yes. I mean,
but
if
I
you
am
look
the
at
better
it from a
trader.
financial standpoint, overall, one of us did end up probably making more money overall, potentially.
Potentially, but one of us invested more money because the
Yes.
first challenge went horrendous.
So
So-
it's up to you. If you want to watch through it, you kind of like, I don't know, the last video, leave a comment kind of saying who you thought did better out of the two of us.
Who would
It'd
you
be
trust with
interesting
your
to
money? That's the question. Who would you say I will give all of my life savings to? That is the question I'm going to ask you. If you watch the Idiot Train Challenge, please comment whose name you would give all of your money to. But don't do that. Don't give either of us all of your money. Go speak to a financial advisor, not us, because we are not trained in this at all. But I think that's quite nice. This has kind of been an enigma. I remember when we mentioned this at the beginning of the podcast, it was we're doing this thing that might never get mentioned on the podcast again.
Yeah.
So we just thought it'd be nice to kind of let you know about that thing. It's kind of been mentioned a few times. We've tried to push people to go watch it and stuff, but we thought, how can we bring this in without it being too different? So we've kind of used it as a topic today rather than using the random generator. But potentially the random generator will return at some point. Is there anything else you want to add about the challenge, Tom, before we move on?
No, that is pretty much it. I think, especially over the past few episodes, as we've talked about different things, especially development-wise, the challenge has been a huge part of that, I'd say, especially for me. So that is pretty much where all of that has been coming from. But yeah, as Matt was saying, hopefully this kind of just encompasses all of that together, and we can now stop boring you with this challenge that we've been doing. And so we do another one, and then we'll bring that up again.
Brilliant. We're going to tell you some more stuff about the podcast in just a moment, and also ask for more of your input, so keep listening.